The stock market has been as wild as the weather over the past few weeks. Joining me to talk about whether or not things will stay that way is JJ Kinahan from TD Ameritrade. Welcome, JJ.
Hey, Craig. Good to be here.
Always great to have you. Tell me, will this be the summer of volatility?
Well, as you said about the weather the last few weeks, nationwide, we see some volatility market-wide over the last couple of weeks, and I think we could continue to see this pattern. The main reasons being we're seeing the bond market right now. You see the 10 years break over that important 2% level. All of a sudden, there's a lot of talk about 2.5% on the bonds. We've had a nice, steady path going there. If, however, we have a big jump in rates, if bonds sell off suddenly, it could affect the overall market. We saw with Bernanke last week some of the talk there, how things can get out of whack in a hurry. And because of the bond market and the volatility there, we're going to see it reflected in the stock market as money starts to change around.
Is it worthwhile to start trading options around Fed meetings? Because last Wednesday certainly was wacky. Things were moving nicely up, and then Bernanke started hinting at tapering, and the stocks really just fell apart. And then they moved again when the Fed minutes came out. So it seems like the Fed is really the center of the action.
Well, the Fed always will be the center of the action. And your question about really should you trade options around it, I would say this. Particularly right now, one of the things you can look at as stocks is where are they in terms of their overall percentile for the last 52 weeks volatility-wise. I'll take like a Goldman Sachs, had a nice run. It's in the 17th percentile. That's fairly low considering to where it's been. So one of the things that you can consider doing is buying some protective puts into these Fed meetings. Maybe 8%, 10% out of the money. You can let the stock move around a little bit. You just want to avoid disaster, particularly if you've had it run up very nicely for you over the last few weeks. So in that sense, yes, I do think it makes sense to buy some protective puts or sell some calls against the stocks that you own.
Can you glean anything from the VIX? The VIX has moved from 12.5 to 14.5 over the past 2 weeks or so. It's still low, but that's a big percentage move.
That is a big percentage move. And the one thing about the VIX, they always say the market goes up the stairs and falls out the window. And we see that the VIX pops that way because obviously it should go up when the market goes down. With that being said, don't get lulled to sleep. The VIX has been very low, very low, very low. If you look at the pattern over the last 3 years, it stays in an even keel, then boom, boom, in 2 or 3 days, it may jump 30 to 50%. We've seen it time and time again. So I would say this, don't be, maybe you sell shorter term, buy some longer term in case volatility does pop. You can take advantage of it that way, but don't get lulled to sleep and think that you can just sell options and they're going to continue to go down endlessly.
And then finally, two stocks which certainly aren't lulling anybody to sleep, are Tesla and Netflix. These are the fun stocks of the last few weeks. Is it worthwhile perhaps buying some out-of-the-money puts on these because the valuations are insane?
The valuations are insane. The thing I would say about it, as you and I both know, we talk to so many people who've been buying these out-of-the-money puts for a while and been getting beaten up. If you're going to do something like that, maybe you consider selling a out-of-the-money call spread against it, so you're defined risk on the upside to pay for the puts on the downside. One of the patterns that people tend to get into, these are high volatility stocks too. You pay a lot just for a put, and the day-to-day decay of the put can eat you up in a hurry. So it makes sense to try and sell something against that which you're going to buy in these situations, so you don't get just kind of whacked out of 50% of the value really, really quickly, which, as we've both seen, unfortunately can happen pretty quickly. And the other thing about those two stocks, particularly for the retail traders, keep it small in there. Hey, we all like to, again, the market's about making money, not necessarily about having fun. Go to Vegas to have fun, get the free drink. So if you are going to trade in there, make it small. Don't get beaten up.
It's always fun to have you here, JJ.
Always a pleasure. Thanks, Greg.
And thank you for watching The Street.